Budget 2026, the growth agenda.
Welcome to this very special conversation to discuss the fine prints of some of the major proposal, emerging out of union budget presented on 1st February. We have with us CBIC Chairman Vivek Chaturvedi. Thank you, sir, speaking with NDTV Profit. I'd like to start by asking you that India is soon going to roll out the comprehensive, custom duty framework. How you think this is going to counter the steep US tariff? If you could elaborate on that framework and how this is going to soften the blow as well.
Well, so if you have looked at the budget proposals, the primary aim of the customs duty rationalization has largely been to ensure availability of critical inputs and raw materials for our industry. The thought process behind that is if make our industry more resilient, more competitive, and shore up to the global difficult times that the economy is facing.
True, sir. In fact, you just pointed out these strategic sectors, the duty exemptions getting extended to even strategic sectors, especially your nuclear power project till 2035. Wanted to understand the idea behind it, one, and second, what would be the possible revenue impact? Is there any estimation on that front?
I would look at it more from the perspective of the criticality of the sector, number one. We looked at energy security. Now, nuclear energy, as you all know, for civilian purposes, it is nuclear energy security for the country. So we have come up with a dispensation of exemption for setting up of a nuclear power plant. And earlier, there was a limitation of such an exemption for power plants of 440 megawatts and above. We've removed that. The government has very consciously removed that. So it's now a facility available for setting up a nuclear power plant, irrespective of the capacity. Not only nuclear energy, if you look at how we are trying to give very critical inputs to our energy sector, we have done away with the customs duty exemption on monazite, which is used for manufacturing the magnets for electronic vehicles. We've done a customs duty exemption on sodium antimonate, which goes into the manufacture of the solar glass, which is a very critical component of solar glass panels. It's almost 26% of the cost of the solar glass panels. So again, capital goods have been exempted from duty if they go into the manufacture of lithium ion cells, which go into the battery energy storage systems. So from nuclear energy down even to a battery energy storage system, the government has been very, very focused in ensuring that sectors like energy, sectors like defense, for example, where we have given exemptions to raw material for manufacture of parts for aircraft, for defense purposes, for the purposes of maintenance and repair operations, or customs duty exemption on import of parts for the manufacture of civilian aircraft. So all sectors have been given a criticality which is there for the country and for the economy, and exemptions have been dovetailed accordingly.
Just wanted a clarity, sir, that since duty has been, extended to many sectors, and one of the reason, of course, being that we are hoping to conclude the deal with India, US as well. Some of your proposal actually going to have give greater access to US market, your civil and defense. What's the thought process? Are you hoping that this will anyway come and this is the part of your concluding the US-India deal?
You see, any free trade agreement or a trade deal is, of course, now a reality. Let's not shy away from the fact, because the government gives a very conscious thought before proceeding with the FTA. From the customs perspective, we also look at how we shore up our industry and see to it that a customs duty exemption, particularly on inputs and raw materials, helps the industry withstand that sectoral pressure in the event that in the FTA, a line item which will be a finished product under the FTA would get some sort of a preferential access into the Indian market. So the idea is to shore up the domestic industry to the extent possible by giving them benefits on the input side, so that when the FTA becomes a reality, a preferential entry of a finished good the Indian domestic industry doesn't suffer inordinately because of that.
Do we expect more rate rationalization in customs going forward? Because this time, I mean, the extension has been given, but not reflecting on the changes in the rates. So do we see any sort of restructuring? Is that something is, on the table?
You see, customs is a very dynamic environment. It depends a lot on the global supply chain, the entry of the goods in the country, the demand and supply situation, how commodities move from a country X to country Y. The FTA impacts the movement of the commodities in the country. So it's not a one-time approach. You see, customs duty nuances are tailored according to the pattern of imports into the country and a variety of other micro and macroeconomic factors as well. So it's not that we've done this and that's the end of it. It's an ever-evolving, very dynamic environment.
It's an ongoing process.
It will always be an ongoing process. It has actually always been an ongoing process.
So moving on, to compensation cess, and it has been notified. It's ending before the the deadline of March 31st. Wanted to understand that how CBIC is going to implement the new cess on pan masala, and what's the preparation there?
So, as you might be aware, the new National Security Cess Act has kicked in with effect from yesterday, the 1st of February. The CBIC formations are at the forefront of implementing this. It's a new act, so it basically provides for all existing pan masala units, in fact all units, to register under the act. That's the first thing. So the registration window, even as we speak, has been open since yesterday. What it envisages is that the moment I will apply, I will get what is known as a temporary registration number, and my application will be decided by the proper officer within a period of 7 working days from the time of application.
Okay.
But notwithstanding the fact that I may still have time before the registration application is decided by the proper officer, the temporary registration number which is allotted to me the moment I hit the portal, that enables the assessee to pay the duty or the cess. The cess becomes liable to be paid on the 7th of this month. So people who have declared, who have entered into our ecosystem since yesterday, for example, the payment liability will kick in on the 7th of this month, notwithstanding that maybe a registration application may be decided, of course, before that time, but may also spill over a day or thereafter. Thereafter, what we have said is that he will file a declaration in respect of the details of the machines installed in the premises. The details would also include very critical data relating to the capacity of the machines, the make and the model, the RPM of the motor, the gearboxes, the number of funnels in a machine. And we've given the dispensation that such technical details will be accompanied with a chartered engineer certificate on behalf of the assessee. So, because obviously an assessee will find it difficult to look into these technical details.
Of course.
So he can employ and take the services of a chartered engineer, and the declaration can be made accordingly. CBIC's proper officer has been given a period of total 90 days from the date of declaration to verify the contents of the declaration and arrive at a determination for the cess.
Okay. Since it's already come to an effect, wanted to understand, is there any estimation on how this is going to shore up your revenue? Any estimation on that?
It's very early days. It's very early days. So, I mean, it's just the 1st of February. So let it settle down a bit.
I understand, because even though it's a new cess, except cigarettes, the tax incidence would remain same on
Yes.
most of the items.
Yes.
So just wanted to have some thought on that, especially in the context of when GST rate rationalization impact has seen, we've been seeing that on the collection figures. So do you have any ballpark figure in mind as far as collections are concerned?
I would say that I would refrain from commenting on that part primarily for the reason that if you look at, of course you're right in saying that there could be existing people, but then we've also given them the leeway to see if machines are uninstalled or they are not in a working condition. There could be some downside on that account also. So the real picture only emerges and we'll have a clarity about all your questions actually downstream, because then we'll have a complete and very clear idea of what is the ecosystem, how many machines, how many assessees, what is it that we are looking at in terms of revenue.
But can we say that it could be on par with what you were getting from the previous regime, that is compensation cess, or
We
maybe
hope so.
higher?
We hope so. We hope so.
Okay. On the GST collection, quickly, sir, we have seen the numbers at 6%, and still I think it's trying to absorb the rationalization exercise. Do you think that the numbers would increase, of course, with the new cess and other measures which usually department takes in terms of enforcement actions?
Well, enforcement actions apart, I mean, if you look at our collections figures that were released yesterday, and if you compare them, let's say, with a year back, I mean, January 25 to January 26, largely comparable figures, notwithstanding the fact that rate rationalization happened in September. So that looks positive from the perspective of an increase in the taxable supply of goods. With economy doing reasonably well, with projections of a GDP for the next BE 26-27, and with the tax buoyancy of around 0.94 as far as the GST estimates are concerned, we would hope to have GST back on the track, maybe not in the immediate term, but definitely in the short to the medium term.
Even you increased the excise duty collection by 51,000 crores.
Yes,
so
yes,
in anticipation of the new levy?
Well, look, I was talking more from the CGST perspective. Excise, of course, is doing even well even currently, because we did impose a ₹2 per litre levy on petrol and diesel in April 2025, if you remember. So excise revenues are pretty healthy, if I would say so. Growth projections are also good. And of course, the growth projections for 26-27 are definitely higher, growing on the back of the fact that there is now a new levy on tobacco and cigarette rates, the levy, of course, and the incidence has now gone up.
So you're expecting the cost of cigarettes would go higher after, based on the new levy?
Well, yes, in the sense that yes, if the duty rates go up, I'm sure the industry will also respond accordingly.
Sure. Last question, sir. Since GST 2.0 we have seen, is this process is still on in terms of, do we see any more reforms coming in the GST in upcoming council meeting? Is there any date decided on the GST council meeting?
Not yet.
Okay. But any major reform is something you're looking at, in the GST?
Well, the government is working on a lot of things, but let the council convene. You'll get to know then.
Fair point, sir. Thank you so much, sir, for taking out time for us and speaking with NDTV Profit. Thank you so much.
Thank you so much.
Budget 2026, the growth agenda.